Hi guys.
Hello, guys. So we're back for 2017. We had a very long break. We were sleeping over Christmas, and
Not really, but
not
yeah,
really. We were actually working on a very big deal that it looks like we finally closed today, but we cannot disclose any details yet.
exactly.
But very well done.
Yes.
All right.
All right. So we actually wanted to talk to you today about loans. You know.
Exactly. And the whole purpose, what we're doing right now, is we're renewing the channel a little bit.
Yeah.
And we're going to talk about business things, and our purpose is to connect with other young entrepreneurs on the planet and give good advices. And we are real estate guys, and we are doing quite big real estate deals, and we're going to show the deals at the points that we can show them to help you guys learn. And that's our thing. That's our focus and direction is real estate. But we have had other businesses before, and I am involved in other businesses, and it's basically awesome to network with other people and know other people, and yeah. So hope this gives you guys something.
Yeah. Exactly. And I mean, talking about loans, right?
Exactly.
Maybe you heard people have ideas that loans is a bad thing.
No, they are bad. They are bad.
Oh, they are
You
bad.
should you
Oh.
should never take loans.
You see, perfect
Yeah,
example, right?
exactly.
So the thing is, there are bad and good loans. All right. So let's say that you want a new car, and you want a nice car, a Ferrari, and it costs, let's say, I don't know what they cost these days, but let's say it's $1 million Ferrari, right? And you're going to take a loan for this. That would be a bad loan because that is just going to cost you money. The car is going to cost you money, etc., etc.
What do you mean? I can get new chicks with that car.
He said chicks. Chicks is even more money. So another reason why you should actually not take such a loan. You know, loans should be used to make more money. So, for example, let's say that we're doing a real estate deal. $1 million, $2 million needed as a loan. And the deal in itself will create us or generate, let's say, a profit of $3 million. So the cost is 3 million and the profit, the gain is 6 million in total. 3 million profit. Such a loan would be good because you're getting a loan on 2 million, and let's say the cost of that loan would be, I don't know, $200,000. So with that loan, you are able to create $3 million, meaning 2.8 million more than what it cost you. Such a loan would be very good.
Exactly. Things in life is never black and white. And when people tell you loans are bad, yes, there's certain types of loans that are bad, and there are certain types of loans that are good.
Exactly.
And and when you hear in the radio that there's a debt problem in the world, and blah blah blah, I actually wish that I had more loans that is good loans. And
Yes.
luckily all of our loans are that we have is investment loans, either
Yeah.
investment into us or investment into
The company.
into the company.
Yeah.
So they are good loans, but I want to be a lot more in debt, if one can say this. And if you can help me with that, feel free to call. I'm very happy to be in more debt. And yeah.
Again, the debt that he's talking about is the debt that generates more income. It costs you a certain amount of money, but it generates a lot more.
Because if you talk to your parents, there's a really big chance that they have bought the house that you live in for $100,000 or $200,000, and today it's worth $300,000. And what would happen if there is no loans? They would not be able to afford the house. They would have to rent somewhere, and they would miss out on this increase of $100,000. And of course, this only gets realized once they sell a house. And this, I think, is a common financial mistake today, that people get stuck in that they have to have their own home.
Yeah.
Because many people could actually sell their homes, take the profit, and then start their own businesses and start using the money for something instead of just sitting in their house.
Exactly.
So this is yet another example of how loans are good.
In investment, you actually have the principle of using the bank as much as you can. And the harder it is to use the bank, the worse it is. Because the banks are actually one of the most inexpensive ways to get loans and to get a lot of more money. Even on the stock market, that's a principle that you use. That you maybe have $100, you buy stocks, but you get a loan on, let's say, $10,000 with $100. and with that you can buy a lot more. Obviously, you need to know what you're doing, because otherwise you might lose that, and then you go way below that. Stock market is not necessarily where we like to bet our money, because it's a lot more factors, it's a lot more gambling. In real estate, if you know what you're doing, it's not a gamble. It's actually a very short deal, as long as you do your homework.
Exactly.
And therefore, loans in our business is always a good thing.
Exactly. I actually think it's a must. We bought we bought an apartment from someone on Friday, and he called himself a real estate investor, and we were actually shocked to figure out that he was doing everything with his own money, and he had quite a big he has amassed quite some wealth. It's quite a couple of millions of dollars that he had. And I don't know how he himself was saying that that was a mistake that he did, that he never involved the banks enough, and he would be, I don't know, he said like many times bigger as he is today had he involved the banks more, and this he feels that he will go back in time and change, but he was safe and everything all the time, and he knew that he had a cushion. And
exactly,
yeah, I'm not sure that I agree with him on this point. I think it was just purely a mistake.
Yes.
And if you want to do real estate and you don't think you're against loans, you're fundamentally, it's against your religion to take loans, I don't think you're going to go very far in real estate, and you will not be able to basically do anything in real estate.
I mean, it's look at a company. You can actually make a very good comparison there, because if you look at the money as a workforce, because that's what you're actually doing, you're making the money work for you. So if you have 10 guys or 100 guys, you can produce hell of a lot more with 100 guys than 10 guys. So if I go into a company and I have 3 employees, then maybe I can renovate, let's say, or I can build one house every 3 months, okay? Meaning in a year I can make 4 houses. Now, if I had 30 guys, I could do 10 houses every 3 months. So in the end of the year, I would have produced 40 houses. The same works with the money. You have, let's say yourself, $1 million, and then you can do with that $1 million, let's say, one product that produces $2 million in profit. Well, if you have $10 million, you can then do 20 million profit as a comparison. So you make the money work for you. It's, view it as a workforce.
Money is your little guys.
Yes.
All right, guys, so let us know what you thought of this video. We're coming soon with our next video, and we're going to be taking up these business topics, and we're going to have other entrepreneurs and interview them and see what they're doing good.
Yes.
And we're going to have lots more of this, lot more of business, and see you guys.
Do write us if there is anything you would like to know about. If we do know about it, we are very happy to share our knowledge in that area. So don't be shy. Send us anything you would like to know or hear more about, or anything like this.
All right. See you guys.
See you guys.